If you invested just $1,000 in Shiba Inu back in January of 2021, by October of 2021, the same year, your $1,000 would have grown to something like $285,000. And so now, if you're wondering if you should buy Shiba Inu and if it's the next big thing in cryptocurrency, make sure you watch this video until the end. What's up, everybody? I am Jaspreet Singh from theMinorityMindset.com, where money minds rethink rich. Shiba Inu was created as the direct competitor to Dogecoin. We all remember Dogecoin, or doggy coin as some people like to call it, right? First, Elon Musk came out and started talking about the possibility of Tesla accepting Dogecoin as a means of payment, and this caused Dogecoin to rise. And then Elon Musk went on to Saturday Night Live, and everybody was so excited about him promoting Dogecoin, and then right after that, Dogecoin tanked. But then Elon Musk started hyping up Dogecoin again on Twitter, and people started to get excited, and then Mark Cuban and Elon Musk teamed up and talked about the potentials of using Dogecoin as a currency in their businesses. Now, Shiba Inu works very differently than Dogecoin, and it's already made some people very, very rich. And now you have some people jumping on the Shiba Inu bandwagon, hoping that they can also get rich because of this new coin, hoping that it's going to be the next big thing. But before you jump on, you need to really understand what's going on. That way you can make smart decisions with your money. That way you don't get burned. For a cryptocurrency to be successful, you need two things. You need the network, and then you also need the usability. So if we go back to Dogecoin, Dogecoin was started off as a joke by some smart engineers who were able to turn a joke into a meme, into a cryptocurrency. Now, it wasn't built with the idea of really being able to use it to build some sort of technology on top of Dogecoin. It was just a joke. But then people started to get attracted to the joke. They liked the idea of Dogecoin, doggy coin, whatever you want to call it. And then you started to see a network of users start using Dogecoin because people liked it. And then Elon Musk got behind it and Mark Cuban got behind it. And now all of a sudden, it had a use, because if people like Dogecoin and they want to consider it their own currency, well, then they can exchange it with one another, and now it essentially becomes money because they believe it has value. And now your network has this usability because Dogecoin has a network. You have people that own Dogecoin, people that like Dogecoin. You have Mark Cuban that says that you can use Dogecoin to potentially buy tickets in their arena. You have Elon Musk that says that you can buy things for your Tesla car through Dogecoin. If that's the case, well, now you have usability and you have people that have Dogecoin. So if you're willing to have Dogecoin and you'll exchange it for something else that was usable, and if people have Dogecoin, then it has a network. This is the big debate that people have when it comes to cryptocurrency, because they say, how is cryptocurrency going to have any real value because it's not real money? And you can almost ask the same question to your paper dollars, because the question is, why are your paper dollars money? It's because the government says that your dollars are money. And because the government says that your dollars are worth something, you believe it, and then you transact with your dollars. Now, the reality is this continues to work because the government continues to have power and people continue to have faith and trust in the dollar. But if the United States dollar was ever challenged as the world's reserve currency, if the United States government was ever challenged as the world's superpower, if the United States economy was ever challenged as the world's strongest economy, and if the United States military was ever challenged as the world's strongest military, then people will start to challenge the dollar. And if people start to challenge the dollar, then people who are earning dollars are going to question, what is their paycheck really worth? Because money is supposed to be a representation of value. It is supposed to represent some sort of value. I mean, if you look at gold, gold is a representation of value, because if somebody goes to mine gold, it takes time, effort, and labor to produce gold. You can't just print it out of thin air. It takes time, effort, and labor to produce gold, which is why gold is a physical representation of value. It is physical money. Now, our dollars are supposed to be physical money because it's supposed to be a representation of value. But it costs just 12 cents to print a $100 bill, and the Federal Reserve Bank can just print money essentially out of thin air. So the money, the dollars, are a representation of value, but it's not a representation of value based off of something tangible, like gold or silver. It's a representation of value because the government says this dollar has value. Now, again, if that dollar was ever challenged, then you would lose some of that value, and then people would start to question what this money is that they're earning, and they would ask for more money, and that would cause a lot of problems. Cryptocurrency works a little bit different because you don't have a central authority which can control or manipulate the value of your money. That's why it's called a decentralized currency, because now you don't have one government. You don't have the United States government or the Federal Reserve Bank telling cryptocurrency what it can do or what it's worth. It's controlled by the people. And so cryptocurrency is controlled by millions of computers, millions of nodes, that's what they're called technically, millions of computers around the world. So it's impossible for one person to try to control the value of cryptocurrency. If you believe something has value and somebody else is willing to accept that value as a currency, well, now you have some money. If I like this marker and I think this marker is worth your shoes and you agree, you think your shoes are worth this marker, now all of a sudden this can be used as a money, as a currency to exchange for your pair of shoes. It's just what people think and are willing to exchange one thing for another for. That's what money is. And so this is where you have to understand the network side and the usability side of a currency. The network side of cryptocurrency is very interesting because for the first time, people have the ability to now make money as an affiliate by promoting their money. So let's say, for example, you watch some minority mindset videos on YouTube, you hit that thumbs up button, and then you say, you know what, these videos about minority mindset are pretty cool. And then you share it with your friends. Now, what do you get? Your friends get more financially educated, and now you have a group of more financially educated friends, which is good. But you don't really make any money through that. I mean, maybe you would if your friends become more financially educated and now you guys can do more business deals together. That's kind of an indirect way where you can make more money off of it. But in most situations, if you promote somebody else's platform, whether it's YouTube, whether it's Facebook, whether it's Instagram, you are not directly compensated through that. But that's not how it works with cryptocurrency because of this network effect. If you really like a cryptocurrency and you like the idea of using it as a currency, or you like the technology behind a cryptocurrency, and then you start telling your friends about it, and then your friends go and they buy this cryptocurrency. Now, all of a sudden, what you've done is you've made your money, your cryptocurrency, more valuable. Why? Because now you have brought more demand, more buyers to the table. And if there are more buyers on the table, then this pushes the price of the cryptocurrency up, because the price of anything, any asset, depends on supply and demand. When there are more buyers and sellers, this pushes the price of an asset up. So if you really like a cryptocurrency and now you start telling all your friends about it and they start telling all their friends about it, now all of a sudden what you've done is you own this asset, you own this cryptocurrency, and you've told people about it who are now buying it, which now makes it more valuable because now more people are using it. You're growing the network, which is ultimately making you more money because now your cryptocurrency becomes more valuable. On the usability side, this is where things get a little bit more technical, because the usability is all about the technology behind cryptocurrency known as blockchain, and the technology that builds cryptocurrency can allow you to do so much more than just transact by sending cryptocurrency from one person to another. Like some cryptocurrencies allow you to build and develop technologies on top of their cryptocurrency, which is why cryptocurrency is more than just currency, it's a whole technology. For example, many people talk about Bitcoin and Ethereum as the two big dogs when it comes to cryptocurrency. Now, Bitcoin is kind of just used as a currency. The problem with transacting with Bitcoin is that it can be slow and it can be expensive because there's a real limited number of transactions that can happen with Bitcoin every single second. And so that puts some limitations on Bitcoin, but Bitcoin was mainly created to be a currency. Ethereum, on the other hand, was built less with the idea of just being a currency, but more with the idea of being a technology, because Ethereum lets you develop many different types of technologies on top of Ethereum. The entire DeFi, decentralized finance industry, is built on top of technologies like Ethereum, which is the blockchain, which is the technology. You may have heard of something called NFTs, non-fungible tokens. This is pretty much like digital art. Well, this type of digital art can be built on top of Ethereum. And so Ethereum is a technology which allows you to build an NFT. It's a technology which allows you to memorialize something on the internet. And so it's a technology which allows you to secure data. It's a technology which allows you to make transactions on the internet anonymously. So Ethereum is a whole technology, and it allows you to do so much more than just exchange it as a currency. So now if we go back to Dogecoin, Dogecoin had a network because people got excited about Dogecoin. And then when Elon Musk started talking about Dogecoin, it got even more people excited about Dogecoin, which built a network. Now, it wasn't built originally with any sort of usability. The creators made it as a joke. And so it really didn't have much technology. But what was interesting, as more and more people joined the network of Dogecoin, they started owning Dogecoin, then all of a sudden it started having intrinsic usability, because then people started transacting with one another using Dogecoin. So it wasn't built with any sort of innate usability of it. It didn't really have any purpose. But when people had a bunch of it and people liked it, then they started transacting with it. So it started creating usability. Now, there are some rumors that Elon Musk could be potentially working with the developers of Dogecoin to create more usability, to expand upon the technology on Dogecoin. I don't know about all that. We'll see what happens when it happens. I don't like to speculate, but there's a chance that something could happen with Dogecoin. The way Shiba Inu works is different. Let me just read you their about section, which says that Shiba Inu is a token that aspires to be an Ethereum-based alternative to Doge, like we just said, and it is a popular meme coin. But unlike Bitcoin, Shiba Inu is intentionally abundant, so there's a whole bunch of Shiba Inu in circulation, and it supports projects like NFTs and a decentralized exchange called Shiba Swap. The first thing you want to understand is it said that Shiba Inu is a token. It didn't say that it was a coin. This is an important difference because there's a difference between coins and tokens when it comes to cryptocurrency. A coin is something that has its own blockchain, like Ethereum is its own coin, Bitcoin is its own coin. But if something is built on top of a coin, that's called a token. So Shiba Inu is not its own blockchain, it is a token because it's built on top of the Ethereum platform. So remember what we talked about before? Ethereum is its own technology, it's its own blockchain. Well, Ethereum has its own blockchain and Shiba Inu was created on top of that. It's built on top of Ethereum. Then it says that two of the main goals of Shiba Inu is to build NFTs and to be an exchange. So let's talk about what that means. Now this part of the video might get a little bit confusing, so I'm going to do the best I can to break it down, that way it's easy to understand. So Shiba Inu was built on top of the Ethereum blockchain. Then Shiba Inu is its own token which supports different projects. So one of these projects is a NFT exchange. It is a website, a place where you can go and exchange and buy NFTs and sell NFTs. Remember, NFTs are digital art, so you can go to this platform and buy and sell NFTs. But in order to do that, you're not going to be paying fees in dollars. You're going to be paying fees in the Shiba Inu token. So you're going to be paying fees in its own currency, in this case the Shiba Inu token, and it's built on top of the Ethereum blockchain. This is called the Shiba Inu incubator. And so what you can kind of see happen is Shiba Inu is trying to create their own ecosystem on the internet. They're trying to create these different programs, like this art exchange. And in order to use their programs, you have to use their token, Shiba Inu. Another platform that they have in their ecosystem is called Shiba Swap. This is the exchange. It is called a decentralized exchange because on this platform, you can go and exchange one cryptocurrency for another. So you can go to this platform and exchange Bitcoin for Ethereum. Now, if you go and do this on Coinbase or BlockFi or Gemini or any other major platform, you're going to pay fees. And then this organization, Coinbase, BlockFi, Gemini, is going to know who you are and they're going to know about the transaction that you made and it's going to be reported. But what makes this exchange different is that it's built off of Ethereum, and Ethereum allows you to build decentralized exchanges, meaning there's no central party, like how Coinbase is the central party, or that BlockFi is the central party, or how Gemini is the central party. In this case, with Shiba Swap, there's no central party. So if you're one of those people that want to be completely off of the grid, you can use a decentralized exchange like Shiba Swap, which is just one platform in the Shiba Inu ecosystem. If all of this made absolutely no sense, well, what you need to know in summary is that Shiba Inu is more than just a currency. It is trying to be a real ecosystem where it has different technologies, different platforms where you can do things with Shiba Inu. In other words, it's trying to make its own currency more valuable by creating platforms on which its currency can be used. Now, in order for any of that to work, you need to have the network, meaning you need to have people to believe in it, you need to have people to own it, and you need to have people actually using it within this network. So not only do you need to have the usability, but you need to have people that are actually using it. Because if you don't have people that are actually using it, then it doesn't really matter how valuable it is and how usable it is because no one's using it. It's worthless. At the time we recorded this video, Shiba Inu is a top 20 cryptocurrency by way of market capitalization. So if you look at the amount of money that people have put into different cryptocurrencies, Shiba Inu is in the top 20. Now, a big reason for that is because of all the media and the press that it's been getting. I mean, it's a meme coin, kind of like Dogecoin, and so you can see wild swings up and down. And anytime you hear somebody like Elon Musk talk about it, well, that causes it to rally like crazy. This is what causes extreme volatility in the short term with meme cryptocurrencies like Shiba Inu, because now you can see some positive press, which bring in some more buyers, and this can cause it to rally, especially because the market capitalization relative to some of the other bigger assets is so small, where now smaller moves can make such a bigger swing because it doesn't need that much momentum to really get it to go up or down. But that's also what makes it so risky, because there's also a chance that it could completely fail. If people don't like the usability of it and people don't use it, then people will see that there's really no reason to be this part of the network, to own it, and that would make it essentially worthless. Likewise, if people start to join the Shiba Inu community, meaning they start to buy it and they like the community, they like what's going on with it, they like the platforms, they like what they can do with it, they like the technology that now they have access to because they own some of the coins, well then that would incentivize more people to want to own Shiba Inu, which would ultimately increase the network, which would make the usability more valuable, and in turn, that would make it a more valuable token, which would make the price of Shiba Inu go up. This is a very, very speculative investment because you have a lot of people that are betting that this is going to work, and if this works, it's going to bring more people here, and if more people come here, then they'll be able to get rich. But there's a chance that you can be wrong. There's a chance that you can be right, but there's also a chance that you can be wrong. It's impossible to predict the future, and you really can't just rely on one person like Elon Musk to support the entire movement. You will need people to actually come in here because they like the token, they like Shiba Inu, and then they need to actually be using it because they like how they can do these exchanges, they like what they can do here, and they like the other platforms within Shiba Inu, and if they fall within the ecosystem, that will drive more buyers and more users into it. So it's impossible to predict which way it's going to go, but you have to be wary and understand that you can see massive swings. Cryptocurrency itself is already a very volatile asset class. You're seeing wild swings up and down, but now you have meme coins like this, which go on even bigger extremes. Yes, it will make some people very rich. It will also make some people lose all of their money. You will have some people that will make a lot of money by trading it up and down. Some people will be investors who owned it for a long time and they will sell out at huge profits. Other people will buy it in the hype and then they're going to sell it at a major loss. So you're going to see big swings up and down. So you just want to make sure you make educated decisions and understand that this is very, very speculative. Can you make a lot of money off of it? Yes. Can you lose a lot of money off of it? Yes. But you need to understand what you're doing and make sure that you're making smart investments. You do not want to dump all of your life savings into just a meme coin, hoping that you're going to get rich quick. You want to make sure you have some sound investments. That way you can build wealth sustainably. And if you want to have some fun, you want to make speculative trades, you want to make speculative investments, fine. Just make sure that you're doing it smartly because nothing can go straight up forever. And there's a difference between being a gambler and being an investor. On this channel, we talk about being an investor, not about gambling. And so you need to understand what it is that you want to do and make sure you're making smart decisions with your money. If you like what you saw so far, then you're going to love this.
Can you imagine how much money McDonald's makes? I mean, they have restaurants on almost every major intersection in America. Man, if only there was a way to own a big company like McDonald's without having to flip burgers. Well, you can. If you take $100 and now instead of going and buying a bunch of Big Macs, you go and buy some McDonald's stock, now you would be one of the owners of McDonald's. And if a lot of people go out and they buy a bunch of burgers and fries from McDonald's and McDonald's makes a lot of money, you make some money too. But there's more to investing in stocks than just closing your eyes, picking a random stock, and then throwing your money in it. I pick JCPenney. Oh no. The majority of people think that investing in stocks means picking a hot stock and then gambling your money in it and then hoping for the best. And that's why the vast majority of people lose money in the stock market. But that's also why we're the minority mindset, because we're not gonna think like that. The stock market is just a rigged casino. Actually, the stock market is a wealth building tool that wealthy people understand how to use successfully. And if you want to use the stock market successfully, you should learn from what wealthy people do. That way you can copy their systems and use what they're doing to get similar returns. Unlike what a lot of people say on the internet, investing is not a way for you to get rich quick. Investing is a way for you to build wealth slowly. If you are not interested in the long-term game and you are solely focused on getting rich tomorrow, then it's going to be very easy to suck you into those get-rich-quick systems where people are selling you lists of the hottest penny stocks that you have to buy today. There's a reason why the most successful investors in the world are long-term investors, not penny stock traders. Investing is also not a guaranteed way to make money. You can lose money when you invest, which is why investing has risks. So you want to make sure you always do your own research before you invest your money, and you want to never blindly just listen to a random guy on YouTube. Who you calling random, Jasprit? The three things that I want you to pay attention to that we're going to be talking about today are how to find a good investment, how to buy a good investment, and knowing and understanding the numbers. Let's start by talking about how to find a good investment. The stock market is made up of different companies called stocks. And now when you invest in a stock, you get shares or ownership in that company. So if you buy one share of McDonald's, you now become one of the owners of McDonald's. There are a lot of different companies and industries in the world, like Like you have tech companies like Amazon, you have retail companies like Lululemon, you have startup companies like Beyond Meat, you have oil companies like ExxonMobil, and you have financial companies like JP Morgan Chase Bank. In the stock market, these different industries are called sectors. And you've probably heard people say that you need to diversify your money in the stock market. Well, when they say that, that doesn't just mean you should invest in Apple and Amazon and different tech companies, because that's all within one sector. Diversification really means investing across different sectors, because if you put all your money in just the tech sector and the internet goes out, now the tech sector is going to be disproportionately affected compared to the oil sector. So you want to start by finding some sectors that you want to invest in. So let's say, for the sake of this example, that you want to invest in tech, financial, and retail. Once you know that, now you have to find potential companies to invest in within these sectors. There's a lot of ways to do that. You can buy subscriptions to financial newsletters, buy subscriptions to stock alerts, read forums, read the financial news. But for the sake of this video, we're going to do something much simpler. All I want you to do is take out your credit card statement and look at where your money is going. Chipotle, why is your guac so extra? If you look at your Visa statement and it says you're spending a lot of money on Amazon, Netflix, Lululemon, and Walmart, and your Visa credit card is connected to your Chase bank account, now you got a few potential investment options. In tech, you're spending your money on Netflix and Amazon. In retail, you're spending your money at Lululemon and Walmart, which is a strange combination. And financially, you are spending money with Visa and banking with Chase. Now you have some potential tech, retail, and financial investment options. But before you just jump in and buy, you want to know the different ways that you can buy and invest in these sectors. One thing that you can do is you can invest directly into these companies. So you can buy shares of Amazon or Lululemon or Walmart or Netflix, or you can invest in funds called ETFs, which give you exposure to a bunch of different companies. So if you want to invest in tech, one thing that you can do is invest in Amazon or Netflix and hope that these companies are going to give you the best returns out of the whole tech sector. Or you can invest in a tech ETF like VGT, not telling you what to buy, just an example, but you can invest in VGT, which would give you exposure to over 300 different tech companies. When you invest in a tech ETF like VGT, now you are essentially investing in over 300 different tech companies without having to buy each individual company, because you're buying one fund that invests in these 300 some companies. So now you have exposure to the whole tech industry as a whole, instead of just investing in one company like Amazon. The good news is your risk is lower, because if you invest all of your money into the Amazon stock and Amazon goes bankrupt, so does your investment. But if you invest into a tech ETF and Amazon went bankrupt, then yeah, the ETF would be hurt a little bit, but there are hundreds of other companies to balance out one bankrupt company. The downfall is your return is also averaged, because if one company shoots up, it's also going to be balanced out by some of the losers, so you're going to get more kind of like a generalized sector return. You can invest in sector-specific ETFs like the tech ETF I just talked about, or you can invest in ETFs that give you general exposure to the stock market as a whole. VOO and SPY don't give you exposure to just one sector. They both give you exposure to the top 500 companies in the stock market. So when you invest in these ETFs, you are essentially getting exposure to the general stock market. So if you were worried about trying to pick the perfect stock, using an ETF is a good way to go. The way you can invest in and buy stocks and ETFs is by using a stock brokerage like our sponsor Webull. All you have to do is open up a free account, and then you can buy and sell stocks or ETFs on their mobile app or on their computer, and you don't have to pay a penny to make a trade, because they are a commission-free brokerage. So you can use your money to invest instead of just using your money to make your broker richer. I'll show you how it works. So if you open up a free account, you can go to the app, and I'm going to search VOO, this ETF. And if I scroll down, so you can see the price it's trading for. If I scroll down and I click asset allocation right there, this will show me the different things that this fund invests in. So you can see that VOO invests heavily in stocks. And then if I scroll down a little bit more, it'll show you the different sectors that VOO invests in. So you can see how much it's investing in tech stocks, healthcare stocks, financial stocks, and on and on. And then if I scroll down just a little bit more, it'll show you the top 10 companies that this fund is investing in. So you can see Microsoft, Apple, Amazon. Now I'm going to compare this to a sector-specific ETF. So I'm going to go back, like VGT. Now, if I go to the same place, I'm going to go to asset allocation, scroll down, and you can see, okay, this invests in stocks again. And now here in the sector weighing section, you can see that it is very heavily investing into tech companies. And if I scroll down, you can see which are the top 10 holdings of this ETF. The cool thing about Webull is their social aspect, because you can chat with other investors regarding a stock or an ETF right off of their app, and you can keep up with the stock's news right on the app too. And the best part of all is that at the time of me recording this video, Webull is giving Minority Mindset fans 2 free stocks just for investing with them when you use our link in the description below. You get your first free stock just for opening up a free account, and you get your second free stock valued at up to $1,400 when you deposit $100 in your account. So if you want to learn more and get your free stocks, I got the link to where you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. I mean, it's free to open an account and they don't charge you a penny to make a trade. So if you want to learn more and get your free stocks, I got the link to where you can do that in the description below. Now that you know how to find a potential investment and how to buy stocks, it's time for you to understand the numbers. On the highest level, you have a company's market cap. You can think of a company's market cap almost like their net worth. It is the valuation of a company. Like at the time of me recording this video, Amazon has a market cap of right around $1.5 trillion. By the way, if you just click on that stock price for Amazon on Webull, that will open up all this other information that you see. To determine if a company is expensive or cheap, you want to look at its valuation relative to how much money this company is making. Like, let's say you and I both have a, flower business, and both of our companies make $100,000 a year after expenses, and we're selling the same thing, we're making the same amount of money, so you'd think that we'd both be valued at the same amount, right? Well, for the sake of this video, let's say that I'm willing to sell 10% of my business for $100,000, but you're willing to sell 10% of your business for $10,000. If somebody buys 10% of your business for $10,000, then your business would be valued at $100,000. And if somebody buys 10% of my business for $100,000, then my business would be valued at $1 million. But since we both made $100,000 worth of profit, I am selling shares in my business for 10 times earnings, because my business is being valued at $1 million, but I made $100,000 worth of profit. So $100,000 worth of profit times 10 is that $1 million valuation. So I am selling my business for 10 times earnings. You are selling your business at a $100,000 valuation, and you're making $100,000 a year. So you are selling shares in your business for 1 times earnings. Based off of these numbers alone, your business is cheaper than mine. You can do a similar analysis like this in the stock market by looking at a company's PE ratio, or price to earnings ratio, because this is going to tell you how many times earnings a company is selling for. So going back to Amazon, so if I click this button, I can see that Amazon is selling for 148 times earnings. Now, if I want to compare that to Netflix, I can come over here and see that Netflix is selling for 87 times earnings. Based on these numbers alone, I can see that Netflix is cheaper than the Amazon stock, but you don't want to make an investment decision based solely on the PE ratio. You want to make sure that you're not comparing apples to oranges, because different sectors and different types of companies are going to have completely different normals for valuation levels. So a financial company and a tech company are going to have 2 completely different types of valuations that are going to be normal in the sector. The PE ratio is just something you should look at to determine how cheap or expensive a company is. What's even more important is that every 3 months or every quarter, a company is going to release what's called an earnings statement, where this company will come out and they're going to talk about how much money they made, what plans they have, and how much money they expect to make. You need to be paying attention to these earnings statements, because these earnings statements are going to give you an inside look as to what's going on in the company. I know it's a little bit tedious, but this is something you need to be doing, because you want to make sure that your company is innovating and they plan to make more money next year than they do this year. Once you put these 3 things together, understanding how to find a good company, understanding how to invest in stocks, and understanding the numbers, you will have the tools you need to invest successfully, as long as now you add in that long-term mindset. Now what you want to do is you want to make sure you're managing your money the right way. That way you can keep adding more money to your investment portfolio each and every month or each and every week. This is where financial education comes in handy, because it's going to teach you, 1, how to invest your money, and it's going to teach you how to use your money the right way. And if you're looking for an easy way to up your financial education, well, that's why we wrote a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get our free ebook and start reading our financial education emails by clicking the link up here, or by clicking the link in the description below. By the way, our financial education emails are separate from our financial news emails.
Thank you for watching. If you enjoyed this video, here's an interview that I did with Raoul on cryptocurrency that I think you'll love. And while you're at it, download our free guide on how to start generating passive income. And as always, keep hustling.
So you've got this situation where the world is in debt, the population is aging, you can't generate growth, and jobs are being competed for by robots, AI,